Hello everyone, this is today's video analysis for May 14, 2019. Today we're taking a look at the USDCHF, the US dollar versus the Swiss franc for today's trade analysis. A couple of things to point out here on the daily time frame. First is the previous trend, the uptrend, the blue trend line that we see here. The market was significantly rising from down here right around just underneath the 0.99 level down into the upper 0.98s at the bottom of the blue trend line. It was much lower, of course, way back here in January into the 0.97 level, but been rising along the blue trend line. The reason I point that out is I took Fibonacci retracement measurement from the bottom to top of that blue trend line. Fibonacci retracement gives us a clue about where potential support and resistance levels will be based on the algorithm of the Fibonacci sequence. So if you look at that trend with Fibonacci, we find the 0.382 Fibonacci retracement level, or 38% retracement of that blue trend, right here at the pink shaded area. And of course, today we are underneath that pink shaded area, so there's your 382 right there. So since we're underneath it, that provides us a clue of resistance. If we were on top of it, it would be a clue of support. Interesting enough, yesterday and so far today, the 50% retracement level of that blue trend sits right around 1.0058, and that's where the current yesterday and today candles have found some intraday support into that 1.0058 level. Just something interesting. Next significant fib level, 0.618 or 62% retracement level, sits down here just underneath our yellow shaded area. So that's interesting. Pink zone 382, yellow zone 618. If the market continues to retrace, then we would expect the 618, 1.0015 or so to become our next potential support, especially if it breaks through the 50% level. So we know where Fibonacci tells us support and resistance are. Let's look back in time along this pink zone, 1.0090, 1.0110, and you can see 3 times circled here. The blue circles show resistance underneath that pink shaded area. So not only do we see Fibonacci identifying that pink zone right around the 1.01 level as resistance, we see historical, actual, factual, statistical evidence of resistance into that pink zone. So all in all, what we're expecting into the pink zone 1.01 is resistance. As long as it's underneath there, we would expect resistance. And if the market were able to get above there, we'd look for it to go higher. That's the risk. And assuming resistance at the pink zone is that it breaks through there and goes higher. And of course, the orange zone sits up there as our next potential resistance. So we've now discovered the boundaries of support resistance, where the market is factually taken or made trading decisions, taking buy, sells, entries, and exits. There's some fact about that, especially if you look at these blue circles. The facts are the market for quite a long time found it as resistance. Buyers exited, sellers entered at that level right around 1.01. So if the market has done that before, we have this expectation that it could do that again. Into that level. So what we're looking for today is if the market can take a little bit of a rally. In other words, the dollar can rally a bit back into that pink zone, we would expect the market to maybe find some resistance, bounce off it, go back down towards the yellow zone in the direction of our momentum and trend. And the risk is it doesn't do that. It finds a breakout scenario and gets above the pink shaded area. 4-hour time frame, not really going to change that philosophy, but we definitely would look for those opportunities as it gets as close as possible. Remember, that's our risk, is that it breaks above the pink zone 1.01. So if that's our risk, to minimize that risk, to make our risk smaller, we want to get as close as possible. If the market can come up and touch that pink shaded area today, 1.0090, 95, it will give us a lower risk opportunity to sell it and target lower levels. And so that's what we're going to be doing today. Selling on a rally into resistance, pink shaded area as close as possible, or even inside towards 1.01, targeting the yellow zone or lower in the direction of our trend and momentum. And the risk is the market changes its mind and breaks through the green zone for the dollar franc today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.